biggie. As a trader, it's probably a biggie. But in life in general, managing risk with Bitcoin is probably the most important thing you can do. It's basically why we developed the Equity app. Basically, what I teach is everything is money management, and after that comes fundamentals. And once you master those two, once you understand money management, you understand what Bitcoin is. Now, finally, you can use technical analysis successfully because you have to have that foundation. But that's true just in trading, but it's also true in every other aspect of Bitcoin. And we have some experts on this subject that can teach you as much or more than I can. I just met this guy, a Bitcoin mechanic, I don't know, a couple of months ago, and Tone had him on the show, and I said, who is this guy? And, he runs circles around everybody. He's been in Bitcoin since when?
10 years now. Pretty much my 10-year anniversary in about a month.
Yeah, and he's looking to move to Mexico. I like that. And, this is where the future is, guys. And I'm just so glad that we made the acquaintance. I'm so glad to hear, man. I hope you love the Baja Ensenada. I know you've been down to see Jimmy's place, and I hope, that's why I hope everybody here is comfortable with Ensenada and Mexico as I am. Because I really do love this place, and it has such potential, unlimited potential, and that's why I'm here. Why would you take it over?
Yeah, I love Baja. Thanks for hosting this conference here. Big shout out to Ugly. Everyone, just give them. It's hard putting these things together. Yeah, so you kind of made me want to start talking about my personal stuff there, like getting out of Canada. But that's not. That seems a little bit of a tangent. I think we should have a whole panel just dedicated to ranting about COVID and ridiculous authoritarian bullshit. It's the elephant in the room in any conversation, really, because everything we do is done in reference to what's going on in the outside world, right? And the reason Bitcoin is so important right now is because the freedom to transact, and it's a form of human interaction, and one of the ways in which they can increase the authoritarian measures that they are inflicting on all of us is, Australia's prime example, it was, you have to stay within this region in certain parts of Australia anyway, 3 miles of your home, and they were checking people's usage of their bank cards to know that they'd gone outside. So that's just one way in which using money that isn't Bitcoin can be used to control you. But anyway, the topic... No, this was Australia. But anyway, so the topic of this panel is about managing risk. So I've never run a business or a company or anything like that, but I can talk about the management of risk on a personal level and how to structure your life financially when it comes to learning about Bitcoin, learning how it differs from fiat money. And I would say Bitcoin flips everything up on its head. It makes it a huge risk. Spending Bitcoin, unless you're really, really sure that you should be spending that Bitcoin, you're taking a huge risk spending Bitcoin unless you know the thing you're spending it on is definitely worth it. Because the weed I bought on Silk Road back in 2012, probably, 39 Bitcoins I spent for a little bit of weed, right? And we know how that ends up. We know that's over $1 million today, I think. So that means that flips the usual narrative on its head, which is spend it because it's going to be worth nothing a few years from now, so you might as well do it. And I would say the risk is in spending Bitcoin, the risk is in not having as much as it as you possibly can, and obviously we also talk about the risk of custody and the risk of storing it with a third party. There's no possible way for anyone to really say, don't worry, we'll store your Bitcoins for you, we're insured, everything's fine. Ultimately, they can't just print more Bitcoins. So there is no one is ever going to rescue you. No one's going to give you that final guarantee that if your Bitcoins that are being held with a third party get lost, that they can be brought out of thin air and given back to you again. And then there are various other elements of it to get into, but I think I should leave it at that. We can riff off each other a bit.
All right. Hey everyone, I'm Lee again. Thank you for the invite and organizing all of this. And I mean, the topic is managing risk, and that comes in all kinds of forms. I mean, we weren't specific about trading risk. I think the biggest factor in managing trading risk is you have to learn how to trade. You don't just randomly watch 3 or 4 YouTube videos and think you're an expert trader. And the biggest part is managing your risk, which Lee and I have both said is quantifiable. You know how much you're risking in a trade other than some black swan events, but your reward is unknown because no one knows what the future holds. But on a bigger scale, I mean, you gotta hedge, especially in this space, you gotta hedge risk before you quit your job. I know some people that have been up on stage still have not, you know, ripped that Band-Aid to be fully in the Bitcoin space. And before you do that, you gotta hedge. Like, what if it doesn't work? Like when I finally quit my day job, which was a Wall Street job, I had several things I was going to be doing. One of them, I have a physical business that did not work out. I was at home trading traditional markets, which was my expertise. I was getting into Bitcoin. I was also getting into public speaking. I was starting a YouTube channel. So I had a bunch of other stuff. I started investing in a few companies. Most of them did not work out, except that trading got replaced by traveling and speaking. The YouTube channel worked out. The Bitcoin part worked out. So there's lots of things. You can't just put all your eggs in one basket, even though it feels that way sometimes for Bitcoiners. We'll go on more specific stuff later.
I always love listening to Tony in real life. It feels like I'm watching YouTube. I'm going to maybe take a different tack because trading's not my thing. So it's like I come from different world. But I want to actually talk about risk as a metaphysical concept. Like this idea of in life, what we do as human beings is, you know, we attempt to progress forward, and you know, we live in a realm within which we're comfortable, and to move beyond a particular comfort zone in order to grow. Like so growth requires you being uncomfortable, and to do that, you need to take a risk in life, and you need to go into a realm that is uncertain, where you might fail, something might happen, you might die, you might lose, etc., etc. But you know, for me, when I think about managing risk in life in general, it's you know, you start to think of preparation. So you don't just go and like go beyond your comfort zone blindly by doing something you're completely unprepared for and making a mistake and dying or fucking yourself up or having a loss. So you want to take some time to prepare. So I think in many ways, having Bitcoin is actually in and of itself managing risk in the modern world. Like there is some major risks down the line that I see in terms of durability, in terms of what you can say, what you can't say, what you can fucking do, etc. And like for me, Bitcoin is, you know, represents a mechanism to mitigate risk in the real world. So anyway, I just wanted to take a slightly different angle, and hopefully that can help.
Thanks, Andre, for having me. Obviously, bringing me here and all those great people. It's really wonderful. So, we were talking about earlier at lunch that that Bitcoin is this strange thing that pays you to organize your life. Because if you don't successfully organize your life with Bitcoin, your risk, your chance of losing your Bitcoin grows. And because Bitcoin is this sort of new technology, it pays you to learn it. Because Bitcoin keeps going up, it pays you to protect it, and it means you have to really kind of study that, and you have to become more responsible.
Bueno, no, voy a dejar enfocado a los dos de esos güeyes. No,
The history of Bitcoin is littered with blown-up exchanges, and I don't know that we're done past that. I don't think that's done. We'll see what happens, right? But so Bitcoin actually pays you to learn to manage certain risks, and the better that you get at that, the more competent you get in the world. The suddenly you grow. And I mean, I think of all the Bitcoiners that I've met, they're all fantastic people. They're all like grand people. They're large in personality. They're large in scope, entrepreneurs, right? In fact, I think part of what this conference is about bringing entrepreneurs together, because we're all here, you know, we're all kind of on some edge. We're all kind of pushing something forward. I think most of us are. And you're not a good entrepreneur if you can't manage risk, because entrepreneurship is almost entirely risk, right? Like most entrepreneurs fail, most entrepreneurial projects fail, right? And so I think we're getting kind of like the hard training in that, right? I think you told me that if you can trade successfully in Bitcoin, or even just break even for a year, you probably have enough skills to do very well in other markets that are much tamer, right? And so that's another thing that Bitcoin does, is just it really stress tests you and makes you grow quite fast. But I mean, yeah, the question of risk management and hedging is very large. I mean, are we talking about money? Are we talking about security? We can take it in many directions.
When I think of managing risk, whether you're trading or not, I mean, this happened to me. I mean, I'm lucky to be an early Bitcoiner, and then I didn't even take the time to learn how to make a paper wallet. And here I am 8 years later with a valid Mt. Gox claim. So, you know, I left myself open to the work, and you know, people that I respected, they said, what are you doing? And you know, coming from a traditional like finance world, and of course they can be trusted, you know, of course. And then that's it, it's over. And what did that do? Well, it made me learn everything that I could today to secure the rest of, you know, my life with Bitcoin. But, you know, I think that if you're overly trusting any of those institutions, I mean, that was the biggest risk mistake that I had made.
Just a quick housekeeping. So the next panel is going to be the last panel, and it wasn't supposed to start till 5:30, and it's only 3:10.
No, we're going to go for now, we're going to start.
So I'm thinking, yeah, next panel is at 4 p.m. and then end at 5. Get an hour and a half in the pool, and then dinner time.
That's the plan, that's fine. We're going to end it early, we're going to
All right, cool.
an hour.
All right.
Right.
Right, so just a heads up, so we're gonna do this panel till the top of the hour, and then one more panel for an hour, and then get through that.
All right, yeah, that's the plan. I was supposed to be soon, but we know that did or did not. So, yeah, so I mean, I can talk about risk management. I feel it's something that has to always be on the back of your mind. It's the thing that I say is the one mistake. Money management is the only fatal mistake people make in business. If and we've seen traders do it time and time again. We've seen major whales get blown out of the market because they get so wrapped up in, once you kind of get in a rhythm and you get in the groove, you get that King Kong complex and you think, wow, I got this figured out. I know.
Yeah, it's like extreme sports. It only takes one mistake.
Yeah. And so, I mean, that's, you can limit your risk, but the other part of that, as a trader, is there's unlimited potential. That's why I know Juan and I are the same on this. We don't have a risk-reward ratio. We don't believe in it. Because there is a risk ratio, but we don't know what that reward is going to be. You don't know. And, like Knut says, the stock and flow model is bearish because he thinks it's going to go up even more, and I get the mathematical argument. And that's what really Bitcoin is about. You don't, my house is not as big as it was once, but you know what? My lifestyle has never been better. I've never had more assets in my life. And I don't really care if I'm the richest man in the cemetery. So it is a quality of life down here. And if you're focused on just having that hodl, my opinion is you've got the wrong focus. And probably people who disagree with me, you've got to have all that Bitcoin, you got to afford it. No, you don't, because if everybody's a hodler, Bitcoin doesn't work.
All right, we already got a question. Mike, stand mic.
That's not on.
Hello?
Now you got it, okay?
Okay, so I think this would be a good question for this panel, and it does have to do with mitigating risk, and it's specifically exchange risk. And so I am an American citizen. I have an IRA account. I own GBTC. I know Tony, you talk about that a lot in your videos. Ugly, he's completely against GBTC. Thinks that if it's not your coin, it's not your Bitcoin. I was chatting with Mike the other night. I think you're invested in a custodial IRA account type of situation. And I believe, Juan, you're still with CASA, so I'm
I
learning.
don't work in CASA, but I
You
like
know
what
about,
they do.
you know about CASA. You know, okay, so you're familiar, maybe all you guys are more familiar with CASA than me. But what do you guys think from like an exchange risk? Obviously, the safest way to have it, the most secure way is have it on hardware wallet or something like that, to my knowledge, and secure your own Bitcoin. However, as Americans, we have a lot of our funds tied up in these IRAs. GBT seems like a good idea, but I'm learning more about these custodial accounts as well, and now I'm hearing that CASA will even do custodial with you and give you, like a multi-sig or something like that. So can you guys talk a little bit about like managing risk on an exchange?
Right.
I'd love to hear everybody.
So for me personally, I always mentioned it. I didn't really care for the 10x leverage, 20x leverage, as far as gambling to make more money, 100x leverage. But I saw it as an amazing way to lower your exchange risk. The way you're supposed to trade is, if you have, say, $100,000 in your account, you're not supposed to bet more than 10% on any position. Ugly may even say 5% on any position. So what does that mean? That means 95% of your money is just sitting on the exchange. When it's a US regulated exchange, that money is fairly safe. But when it's a crypto exchange, that money is not safe at all. So having the ability to go 10x on a trade allows you to only transfer Bitcoin into the exchange, and you put that entire thing on the trade. And if that trade doesn't succeed, you're going to do another trade, you transfer more money in. But having leverage allows you to optimize and have amazing exchange risk by using leverage to lower the amount of money sitting idle on the exchange.
Yeah, let me say that I have lost more money on exchanges than my hobby. I can safely say that. I mean, I know that I have probably several hundred at least. And but I think the exchange rate, the exchange risk now is almost minimal. I think that for two reasons. I think number one, if they are, look, the government wanted to shut down BitMEX, but they can't. Now, they can shut down any of the regulated exchanges. And so I think they're still, now, do I think that the exchange itself is going to fail? No, I think the exchanges themselves do the regulation are probably safer. Do I think you're at risk if you have all your assets in your house and legacy retirement account? Yeah, I think you're a sitting duck. And I think you are at huge risk. Because you're completely vulnerable at any one given moment. And so that, to me, is where the risk is. You need to, if everything is in your house and if everything is in your legacy retirement account and you got this little hollow here, pay the tax, get it out and get it into Bitcoin. Or sell your house and move it to a smaller one. However you need to do it, you need to make that transition. That's the risk. The major risk now is confiscation. And you just, I don't know, when you drove across the border, did you see the kiosks coming out? When you leave the United States, there are kiosks now with computers. They're ready to stop you. They're not activated yet, but there's going to be a day you're not going to be able to leave the United States without permission. And you
Oh, that day is coming, which is why, second passports are an absolute must.
I agree with what you're saying. Bitcoin exists and it raises the bar for everything else, and that's true in a whole bunch of areas. Like me and Knut were talking about earlier. Like, it's all very well to come along and call your shitcoin decentralized, and it might have been decentralized if it existed in 2008. Or, Bitcoin wasn't that decentralized, it just got more decentralized, and now that's the bar for decentralization. And if you want to start a shitcoin, it takes a while to reach there, and it never will because it exists in the context of Bitcoin existing. So when you're talking about risk, you're talking about how risky is it to own something in the world where Bitcoin doesn't exist. Well, you can't really own, everything can be owned to some degree, and some things are more strongly owned than others. I don't really know a better way to describe it than that. But then Bitcoin comes along, and it's something you can actually own, unlike anything else. There's no form of ownership like Bitcoin ownership. It's just, it makes everything else look borrowed or leased, or, the property. People think, like, ultimate goal, I want to own some land, I want to do what I want on it. Try living in Canada, where I live. Like, you don't own anything about your property. You have to pay continual maintenance on it. If you get in people that rent from you and you want to kick them out, you can't. And if they don't want to pay rent, that doesn't even matter either since COVID started. So there's nothing you can really own. So taking that into account, the fact that you just eliminate all this risk, there's no sort of, there's no tacit agreement with the state about whether your property is really yours or not, and all dependent on you sort of continuing to live up to a contract with you and the state that they can change unilaterally at any point that they decide. Like, oh, property taxes went up, this happened, that happened, and if you disagree with any of it, your house isn't yours anymore. Like, it made sense to think of your house as yours before Bitcoin. Now I think looking at things as your property in the context of Bitcoin existing, I wouldn't even call my house my house. It's the bank's house. And they can take it away from me in 2 minutes if they want. So the fact that Bitcoin exists, it just raises the bar. And when it comes to the risk you take for indulging and considering something as yours, then Bitcoin just says, you can do it with me, but not much else.
Now, it's not a prediction of me. I'm not predicting or wishing that this will happen. I'm just saying, we're talking about risk. And it's an unacceptable risk of all your wealth is considered a sitting duck. And so you've got to make this move. It's just to prove. And I hope I'm wrong. For those of you who choose, okay, well, I feel safe in America. America's the last place. If America doesn't make it, the world's going to go to hell in a handbasket anyway. And I understand people have that point of view. And that's fine. You have my support. I mean, I'm hoping that we get our Constitution back and become a nation ruled by law, or what we used to be 100 years ago. But I'm not risking that. To say that that's going to happen, I think is silly. And you're thinking that it's too big a risk, and you want to take the necessary steps that you need to, so you're not that vulnerable.
And so one of the things that you've taught me, Ugly, and that you teach with Educator.com is literally this question of managing risk is very pragmatic and very practical. I think one of the rules that you sort of put out there is don't trade with more than 5% of your bottom, right? Like that's pretty much the maximum you want to have in an exchange because you can leverage that and you can benefit from that leverage, right? And so literally we're talking about testing the waters in new areas with small portions of your assets, right? That's one way to think about risk, right? You're just limiting how much you're risking. A lot of people will go all in on a new project or even with Bitcoin. I mean, I've been all in on Bitcoin for a long time and it's paid off, but I could have got it wrecked, right? I mean, I didn't have a whole lot of risk at the time. Yeah, so I just wanted to clarify that for people that aren't traders that are wondering what the hell we're talking about. Is that, yeah, literally you can have a portion, you can have your HODL outside of cold storage, you can use multi-sig, we can talk about multi-sig and other security stuff, about how to manage your security risk, but then also, you can have a portion that you're trading in the exchanges and so on. If you're a trader, that's kind of a clear example of
But to what you just said, the bottom line is to draw from it is not having any Bitcoin is the greatest risk.
That is the greatest.
I don't care if it's an GBTC or retirement or the exchanges, like not participating, that's got to be the worst risk.
I'd agree. I think I sat through 2 bubbles in 2013, 2017, sat through another bubble. Every hard fork that came along, yes please, that's extra Bitcoin for me. Dump B trash, dump everything else. And why? Because selling it and buying anything else is too risky. What else can I own that can't be confiscated or devalued, or I can't flee the country with it? Bitcoin is the solution for this.
Now, on the other hand, to kind of make it a little bit more interesting, you're talking about hedging risk, right? We're talking about hedging. If we're already all in on Bitcoin, right? Which, you know, if you're here, you probably are heavily invested in Bitcoin. And we have this very volatile market, right? That even today, you know, just went up 50% from 30,000, right? To 45, 26, right? And we also crashed from 68 to 30, so that's like more than 54% correction, right? So how do you actually, like, do we just hodl through it, you know, through sheer willpower, right? Or can we be more sophisticated than that? And I think dollar cost averaging in a consolidation or in a bear market is obviously one of the most powerful strategies. It's very low cognitive cost, very easy to do, and very powerful way to accumulate. But I'm starting to wonder, is there at some point, if you do a 3x or the 3 years all-time high, is there at some point where it makes sense to start dollar cost averaging out so you get some profits, right? Only one of the things that you talk about is this spendle or spending, right?
That's basically what
Savvy, right?
that's saving, and I take the word savvy and say that let's say YVV because it's saying savvy, and it is. It's dollar cost averaging out into other useful assets. Our home is here. You know, Amy says comfortable. She wants land and property. She loves this country. She has no intention. We're not moving. My goal is I really, hopefully, by the end of this year, never have to go back to the United States. I'm not perfectly safe here. I'm extraditable, but at least I'm not going to get surprised. We've got a warrant on your arrest if you're leaving the country or something or going into it. They have one more step that they have to do to get me, and we saw that. I mean, look at the sweetheart deal that Arthur Hayes had. I guarantee you, the victims in federal prison, there is no bond in the United States anymore, guys. All they have what's called a bond hearing, and if you are a flight risk or they consider you a flight risk or a danger to the community, you don't get bond. And people think we have bond now. Well, some of the states still do, but the feds certainly don't. And because of Bitcoin, you saw Arthur Hayes go to Hawaii and said, okay, I'll surrender. I'm going to go to Hawaii, but I've made every court date, and I'm going back to Singapore. And, you know, that was an unheard of deal, and with Bitcoin, it gave him that advantage. So hopefully, you know, he's going to fight this thing. I hope they beat it. So,
Yeah, I want to answer the question slightly differently, and then we'll grab a question. In that, the question, like you posed it specifically as to increase your monetary wealth, and as was stated earlier on stage, that's not what life should be about. So if you are bullish on Bitcoin, especially if you've held through a couple of these bear markets, at least one bear market, and you're very optimistic about Bitcoin, and while you may not have enough money right now to just, you know, retire and do whatever you like, you are definitely confident that that's coming. And what happens when it comes? Is it all about the money? No. So this is the time to do something, learn a skill, start getting into something you really love doing, because that is also a hedge. Because if you take this time while Bitcoin is still, you know, has its hyper-Bitcoinization to go, there's really only two options from that point on. Either you are very wealthy with Bitcoin and you now have the money to make that hobby a real dream, building something out of it, adding to society, whatever your passion always was as a kid, to do something, whatever that career could have been if money wasn't the reason for your current career. Or the other option is Bitcoin does go down, but you just spent all this time getting better at a skill that you actually like. And then you can recover with that skill. And your next job, let's say Bitcoin does crash and go to zero, you just spent a couple of years perfecting something you always wanted to do.
Just make sure
And
that
being the very
goes in
best
gulags.
that you can have.
If Bitcoin goes to zero, we're all in the fucking gulags.
Probably, but
Bending over, picking
but-
up soap.
But I think you guys see what I mean, right? Like this is kind of how I did. I wanted to do what I really like with, Bitcoin as a backup that's still working.
I mean, and everybody's different. I mean, my friend flip-flop Ron here, he knows how to run trailer parks, and he's got a great story living on the street, but you become the very best at whatever you choose to do. And then a Bitcoin, you don't have to choose what Tone or I or any of these guys up here were Bitcoin advocates. You can be very silent. In fact, we would all recommend you're better off that way. Why put a big target on your back like we've kind of chosen to do? You don't have to do that. And we would all recommend, you know what? You don't have to, don't do it. We've chosen to do it. But you don't have to choose to do that, and we respect you for that.
Let's go with a question.
It's not really so much a question, you like that,
Maybe the question is, what do you think of this idea? Earlier Tone talked about not trading if you don't know how to trade, or you can't watch a few videos and then you become a trader. And Juan just talked about how you dollar cost average in the bear market, and then you have a bull market, you're at 3 times the previous all-time high, and shouldn't be dollar cost averaging out. But one of the risks there is you're trying to time the market. So what if you have a mechanical strategy whereby you don't time the market, you use market price to determine your actions? So for instance, say you take 10% of your stack and you decide to keep that in cash. So when the price goes down, well, now you've got more than 10% in cash. So you buy Bitcoin to keep that balance. Then when the price goes up 3x, now you've got a lot less than 10%. So you sell a little bit to maintain that balance. And probably you would want to check it monthly or something like that, not constantly doing it daily. That way, you end up dollar cost averaging in and out and keeping the same ratio of dollars out of cash if you're all in Bitcoin. Because if you're all in Bitcoin, you risk the possibility of needing to sell at some point and it not being opportune time.
Yeah, and when we talk about cash, I think we literally mean have some paper, physical cash, because until Bitcoin becomes a currency, there is a moment where you might need some cash to get out of Dodge or whatever, right? Like I think obviously we're in very, very complicated times, right? And it might not happen, but that is part of hedging risk, is being able to have what you need to deal with a crisis, right? But I really like that idea. It's something that I've been thinking about and talking to a friend about, just having some sort of basket or having like deciding on a ratio of investment. So I have some gold now, some silver. I'm hedged against a sharp crash, right? So if the markets, if we had a little COVID event where just the price, everything drops 70%, right? I'm actually hedged against that, which is nice, right? And then just rebalancing your portfolio once a month. I think it's an interesting idea. I think it's just a topic to explore more into, because I think we can become more sophisticated than that. I think HODL is very powerful. HODL also is very powerful. I mean, it is a very powerful strategy, and you're better off HODLing than not HODLing. Just because if you spend it, you're going to regret it. But you also have to live life, and there's other stuff going on.
Yeah, it's a good strategy. There's others, and if you go back and rewatch Hyperwave YouTube channel with Tyler James, he was a trader using right here, using weekly charting with moving averages that he was comfortable with after 30 years, and He's entering positions that he plans to hold months, maybe years. Sure, occasionally he enters a bad position and he'll know within a couple of weeks if that was a mistake. But that's still, you know, longer term money management, and he felt you can do way better than buy and hold by trying to catch the bigger cycles. And his number one tool to catch those cycles was just moving averages. Sometimes simplicity wins.
Yeah, some of the best traders out there, guys, there's one of my heroes in trading is Ted Warren, who had a sixth grade education, but what he taught was basic money management, and, you know, he just taught quiet markets, and I know I'll never forget when I first met Tyler, and he introduced me to the hyper as that way, and I said, Tyler, you got that from Ted Warren? He said, yeah, I sure did. I'm a big fan of Ted Warren. So Ted Warren kind of outlined the hyper way, and then he really took it to the next level to say, this is, he identified it and applied it.
And it's crazy. Tyler knew every trading system known to man, and at the end of the day, it was almost always just moving averages.
Yeah. Just a comment on if Bitcoin goes to zero phases. Like, well, let's say Bitcoin goes to zero because time machines or whatever.
I mean, no, there's always a possibility of a critical bug that you just can't get consensus on for a hard fork. Like it's a non-zero probability of that, but I'm risky it. So is everybody else in here?
Yeah, I agree. There's a non-zero risk, so there is a risk. But if that happens, Bitcoin, as I said before, it's just an agreement between us in here and every other Bitcoiner on a fair set of rules that we agree upon. And we will still know each other, all of us. Like, we're still connected. There's a chance that we can agree on something else also, even though we're like the most disagreeable people ever. We will find a way. Life finds a way. I'm hopeful. Bitcoin is hopeful.
I agree, it'll be challenging. It's the same argument for Tether, actually. Like, everyone is like crazy, like, well, like, how come Tether is worth $1? It's clearly not backed. Well, because people that are using Tether are so invested in Tether being $1 that even if it's discovered, Tether is not backed at all. It's still possible Tether is going to be worth $1 because everyone agrees that if it's not worth $1, everybody suffers. So yeah, there's always a way until eventually, you know, there is a.
All right. So I mean, somebody asked, Aaron asked about multi-sig and stuff. I'm just so you guys are aware, like, just talk a little bit about that, like the security risk. And I'm not an expert on it, but I know enough that I can teach about it, I think. And so just a big level overview of how one possible way to secure your HODL, and there's many ways to do it. With multi-sig, with Casa, for example, which is an app, very clean interface, very easy to use. You can have one Bitcoin account that has 3 out of 5 hardware wallets associated with it. Well, it has, let's say, 5 hardware wallets associated with it, and you need 3 to sign a transaction out. And so now your private keys, you are now decentralized. You have decentralized yourself. Most people in this industry have all their crypto or Bitcoin in one hardware wallet, and there's a paper backup somewhere stashed in the room. And that's better than having it in a centralized exchange, but you can do a lot better than that. So for example, you can have one hardware wallet with your lawyer. You can have another one buried in a hole somewhere in a metal cage with a plastic bag protected from the elements, right? You can have one with you, right? You can have another key in your phone, right? And suddenly, you know, and you can even have one in a different jurisdiction, right? Such that if you know, some mobsters want to come for you, right? Like you have to play in 2 different countries, right? Like there's a lot of are very vast, and they can make you very difficult. It make your wealth really difficult to capture by other people. And I mean, I think Arthur Hayes is actually a really good example of that. Like the fact that the federal government, or I think it was like was it the federal government that was going after him, or
Yeah,
that they couldn't really get to him, and make an example out of him, right? Despite the fact that there's clear incentives from Wall Street to hire him, right? I mean, that's conspiracy, but to get him, like it really shows the power in this stuff. It's more than an agreement. It's a security infrastructure, right? So yeah, I mean, I think that there's a lot of stuff to learn there. I think Cass is a really good guide on that journey because it's still experimental. You don't want to. There's a lot of technology that you want to be careful not to put all your money in because it's new as well, right? I think we got to use the best technology that's around. So anyway, I just wanted to give a little bit of an overview of the potential there.
Right. But like, some of us are like old dogs, you can't teach an old dog a new trick. Like it's fun to play around with that stuff, but look at the additional risk that I'm gonna take on, by screwing around with all these multi-sig wallets in my house. You know what I mean? Like once you find what works for you, I think that, you're overcomplicating, it can be.
Sure, and it can be, and it's a very subjective question. And risk management in general is very subjective. It's about your personal risk and threat model, right? And what you're comfortable with. And also in terms of risk management, you don't have to go all in on multi-sig or whatever other security setup you're going to use. I mean, there's people that don't like multi-sig and they argue that you should instead just have, get a laptop with cache and solder, then antenna, and just go really deep cold storage, and eventually you end up with a metal backup somewhere stashed as well. I mean, there's different ways to do it, but I think that I forgot what I was going to
Yeah, no, and there is a problem. It doesn't even have to be a multi-sig. It could be your single sig wallet. The more often you check that cold storage, obviously, it's a risk that someone else sees you entering that key. But if you don't ever enter it, there is a higher risk that you're going to forget how to do it. Or you haven't checked your private key in 8 years, and all of a sudden you realize that your cleaning lady actually cleaned out that locker long ago. So it's an issue, right? It's a general issue. The more time you access it versus never accessing it. And everyone's medium is different. Everyone's
and you can apply this risk management strategy to playing with this technology as well. Like whenever I test any kind of wallet setup or wallet product, I'll play with just a little bit of it, and I'll get comfortable. I'll move some money around. You gotta, and so I'm just risking a very small piece in order to understand the system. But I think you're 100% right. I don't think good security has to be easy to use. Otherwise, you're more likely to lock yourself up in your own maze of security than you are to actually keep your point safe. So, I mean, in terms of this, like I do a lot of consulting with private people, and it's like if it's the biggest risk. One of the biggest risks to your Bitcoin is you messing up your wallet setup. Yep. It's that and getting hacked in exchanges, right? Those are the two great monsters we have to fence off: ourselves and the hackers, right? And so you have to use a system that's well tested, that's easy to use, that you can actually navigate.
Between the Spider-Man and
Juan, since you came back to the cost of the multi-sig, so just to kind of touch base on that again, so let's say that what I'm saying is true, and all of a sudden all of our retirement accounts get confiscated. Well, it's my understanding that you can actually buy Bitcoin, have it on a multi-sig wallet where the custodian has one of the signatures and you have one of the signatures. So if that's the case, now maybe I can't get those Bitcoin if they get confiscated because the government's confiscated that hardware wallet, but at least the government's not going to get those Bitcoin either. Whereas GBDC, they would be able to get those, I believe, probably because it was Bitcoin.
Yeah,
And in that case, I should be a donation to everybody in the room.
CASA should not work like that. Like, I'm not very familiar with CASA, but yes, CASA's key may be compromised, but that should not stop you. I mean, you should still have control for 2 keys.
Yeah, so Casa has 2 main setups. It has, well, the thing you can get a single key wallet, which is free. It's got a 2 of 3 multi-sig, where they control one of the keys. The second key's on your phone, and the third would be on a hardware wallet. And then it's got a 3 of 5, where they control 1 key, and then you control the other 4. And you need 3 of them to move the money out. And so they're like an emergency recovery, like worst case scenario kind of.
I think it's only for
So-
custodial IRAs
Right.
because they have to actually control.
You can't have custody
But
of
you
your
can't have
IRA.
custody of your own, yeah.
Well, you
In
can.
order for it to be in retirement.
There are
We can
some
talk
paths.
about it later.
I mean, there are paths to like self-custody, IRA, Bitcoin holdings. I think there is a couple of people that I know that are working on that or like helping people to do that. It's not trivial, but there is a path there.
It's just another way to hedge that I don't know enough about, and I don't know if anybody's doing.
Just get out of the
Mechanic.
legacy as much as you can.
Mechanic, it's like, that's far too complicated. You know, that's not for the consumer.
I would say, like, the chances, if you put your Bitcoin stash on an old Android phone, the chances of the coins getting stolen are pretty low, though obviously no one would recommend you do it. If you try a multi-sig setup and you're not really sure of what you're doing, the chances of you locking yourself out your own coins are really high. So this is about risk management. I'd say, logically, the advice I'd give to you is just get an old phone, install a wallet on it, and put your coins on there.
If you don't use custom multi-sig, that's
The last panel we're gonna be doing tomorrow afternoon is from this guy. I gotta do beyond Bitcoin. Well, I don't look beyond Bitcoin, so, Bitcoin mechanics gonna hopefully take us on a journey of where we go.
Tomorrow's panel?
Tomorrow, the last day, the last panel tomorrow. So, with the beyond Bitcoin national.
Yeah, that's going to be on, well, we've got a guy here repping Start9 already, just someone that's into the project. Start9's just to give you a preview of it, it's just an idea of what else can be done in the digital realm to help people with self-sovereignty and to not rely on third parties that are abusive by design. And we've spent the last sort of 7-8 years dealing with people pretending that they were thinking of moving outside of Bitcoin by tokenizing and blockchainizing everything and really just making scams. And then recently I realized, no, it is valid, but you don't need to do all this stuff. You can come up with the idea of chat platforms and social media and cloud storage and all of these things in a way where we break dependence on abusive platforms like Google and Facebook and Apple, and everyone should be incredibly pissed off with Apple right now. It's the perfect time to decide I've had enough with using platforms like this.
All right, no, I guess we're wrapping it up, right?
We're done, yeah.
Okay. Yeah, no, that was well said, and I'm happy to leave it on that note.
Yeah, we got a 10-minute break. We're gonna do really exciting, this will be a hot topic, and that is legal tender. Should it be embraced, Bitcoin legal tender, should it be embraced or abolished?
Yeah, that should be a good panel. Looking forward to Jimmy's thoughts. I'll be moderating.
So that should be comparable to the banking,